Hello and welcome to the status report overview of SKAGEN Kon-Tiki in February. Let's take a look at the highlights for the month. Kon-Tiki was up 1.5% during February, outperforming the MSCI Emerging Markets Index by 0.2%. Year to date, the fund is down 3.2%, which is slightly ahead of the benchmark. One new position was initiated during February and we exited completely from two companies. The portfolio remains attractively valued both on an absolute and relative basis. The fund's top 35 holdings, which together represent 73% of the portfolio, trade at a weighted price-earnings multiple of 8 times versus 11.5 times for the index, with a combined upside of 42% based on current target prices. Emerging markets now trade at a 35% discount to developed world markets. Sentiment towards emerging markets remains ice cold, and so far this year, redemptions from US-based emerging market ETFs already exceeds the total for the whole of 2013. While some pessimism is warranted due to a lack of political and economic reforms, as well as fast debt build-up and vulnerable imbalances in certain countries, we believe that the sustained negative sentiment, coupled with attractive valuations, continue to bode well for long-term returns, especially for value-conscious, active stock pickers. Now let's take a look at the month's largest contributors and detractors from performance. The fund's two largest holdings were also the winners during the month. Hyundai's share price reacted positively to reports that it is set to build a fourth plant in China, which could be operational in 2015. China represented 23% of the Korean auto manufacturer's unit sales in 2013. Samsung Electronics, meanwhile, launched its new Galaxy S5 during the month, the latest upgrade in an important product line for the Korean electronics company, which contributes 25% to group operating profit. On the downside, Systema, a 3.2% position in the fund, and Richter Gideon, a 2.2% holding, were the biggest detractors. Systema was impacted by the Russian market sell-off, while the Hungarian pharmaceutical company warned on profits as a result of depreciation in the ruble, as Russia accounts for approximately 30% of group sales. Now let's run through the portfolio composition and have a look at what changed during February. United Phosphorus entered the portfolio as we believe the Indian agrochemical company has strong growth potential in crop protection and seeds. The company has successfully expanded into a global competitor with patented, proprietary and generic products, and we believe it is in a strong position to capitalise on the expected demand growth as farmers seek higher crop productivity and better disease protection in countries like India. We continued adding to our position in SBI Holdings, the online Japanese broker, as we believe the company will benefit from increased trading activity and is priced at an attractive valuation. We took advantage, meanwhile, of temporary weakness in Lenovo's share price to increase our position in the Chinese electronics company during the month. We also increased our position in Kinnevik as we think the company will benefit from increased visibility on the valuation of new assets and the transition from a traditional Swedish investment company to a global developer of internet assets. On the sell side, we exited completely from Abengoa as the Spanish engineering services company's share price has increased almost 60% this year and reached our target price. We also sold out of HSBC as we saw limited upside potential compared to other investment opportunities. Finally, we reduced our position in Royal Caribbean Cruises as the stock approached our target price after a 12% increase year to date. That's it for this month. Thank you very much for watching, and for more information, please visit the SKAGEN Kon-Tiki section of the SKAGEN website.